I called this trade out before it happened on Monday, and some of the students in the group made almost $2,000 just by following the simple blueprint because they knew the easy steps to success of the pivot precision strategy. Before I dive in, I want to make sure that you like and subscribe to this channel. We're going to be bringing you live trading examples, giving you all the secret sauce to make you a better day trader, and it's all for free right here. Like and subscribe, and then also share this with someone else who wants to become a better day trader. All right, so full transparency. This is where Monday we actually called this out. Wait for this before taking calls. We're at previous day close, which is going to be a key level that I'm going to talk about in this video. Very important area. If buyers can regain the PD close on good volume, then we have a good call opportunity. Volume picks up and then price action rejects the previous day close, then expect some choppy selling. Okay. The reason for that is if we can get above the previous day close, it's a lot less friction going to the upside, especially with the way that the market's been trending. So this is the doodle that I posted for all of our students to look at. This was at 11:40 a.m. When this was posted, giving everybody plenty of time to start paying attention. And then move happened. Hope you caught it. And again, this was almost a $2,000. If you're trading 100 contracts and you're selecting the right contracts, which we talk about on these calls here, this moved from the 554.80 level all the way up to the 555.20. I didn't take all the way to there. And a lot of our students right now got about a 15-cent win on the options contracts, meaning that they made $15 for every contract that they own. So if they had 100, they made $1,500. And it was a very strategic and simply executed plan based off the current elements that we use, which is find a key level, pay attention to volume, make sure there's volume in the market, find a price action signal, a candlestick, and then have a strict or strategic stop loss plan and stick to that plan. Those are the four elements. Very simple. Let's talk about them in depth on the chart right here today. So here is the chart from Monday. This is what we saw. Okay. And again, I think that this is about the time when I made that post right in here. And I told everybody what we were waiting for. First of all, when you break these key levels, we want to make sure that we have a retest of the top. We don't want to play the breakout. Obviously, if you played the breakout right here, you'd have been very disappointed. So we're more interested in being patient and waiting for a retest and then be supported by the right price action as opposed to, playing the first one out. Okay. But so the first component's a key level. Why did I use previous day close? Previous day close, previous day open are really good spots, and we can go right over to the one day chart and set that. So it makes it very easy. You go to the previous day, you look at the candlestick on the 1 day chart, just like so here, and we can see, from this day, that was this close here, right? This is where that came from. So why is that so important? Number one, it doesn't move. Okay. So when you're setting key levels, sometimes there are certain ways where you can set them and then they move and you got to reset them. With this one, because we were in such a strong uptrend, this previous day close was a very, very good base. It provided a good foundation for trading. So we were using this. And then I also had on that day, I had previous day open, knowing that really if it's in here, it could be pretty choppy. If it gets down below, maybe there's an opportunity. But there was going to have to be major selling to get down here. Okay. Any volume that came into the market that represented price action, strong bullish price action, we wanted to pay attention to, especially if it was right around this previous day close. Okay. So that's where we got that level from, and it did not move. And that's what made this trade even easier for us is as we watched it approach this level, we knew we want to see it get above and we want to see it regain and actually hold that level. Okay. The other thing that we're looking for, so we have a key level. So number one, key level. Number two, we have volume picking up in the market. Without volume, there's no momentum. A lot of people are scared of volume, saying that, or volume and volatility, because if the market's volatile, it's harder. Well, you have to have volatility, guys. You have to have some volatility, and you have to have volume to actually move the market. And one thing about volume is typically volume is going to precede price action, meaning that the volume over here is actually going to kind of be a wave that pushes price action in a direction. We just have to pay attention to price action. So there's a couple of signals. So we knew we had the volume picking up, which means that I need to pay attention. I need to be in the market. So that's the second piece. Number 3, when we looked over here, and we're right here next to this previous day close, so that's the key level that I'm paying attention to. We had a very interesting candle. Okay, this hanging man supported by pretty above average volume, which is what we're looking for. Volume, by the way, is relative, and I'll go into that more in detail in later videos. Volume is relative, meaning that we're looking at what's happened before it. A lot of people will be like, well, overall, this is low volume for the day. Well, we're looking at what's happened in the last 30 minutes because that's what we're trading. We're trading a shorter term chart. Okay. So I had a great candlestick signal here that kind of pushed price back up above. We retest and we get the same looking candlestick here. Okay. And then what I noticed down here is, again, volume is relative, but if we look at this, all right, we have this hanging man, and then all of a sudden we start to build out. If we look at the volume down here, we start to build out in this direction on rising volume, which gave me the confidence to enter here. All right. And then I actually ended up taking a 20-cent win here. A lot of my students took a 15-cent win. Basically, the target for me was this area right here. Okay, there had been this previous kind of choppy area. And if you notice, it hit here like 1, 2, 3, 4 times. So that was kind of the area that I was looking to hit. And obviously it kind of went above that, but then it came right back down and then kind of shuffled down. But that's why I got out here. A lot of my students got out in this area because number 4. So let's repeat. Number 1, we have a key level, predetermined. Number 2, we have rising volume. It's the wave that's pushing the market. Number 3, we have the price action indicators, which in this example here was these hanging men, and then we got above and we had strong building green candlesticks going upwards. Okay, so number 3. Then number 4, we have to have a strict profit loss plan that we're able to stick to with discipline. A lot of my students right now, we have them using what's called bracket orders. And then we're seeking out the opportunity to make 15 cents. And then our losses are hard stopped at between 10 and 15 cents. So we're at least getting a 1-to-1 risk to reward ratio, shooting for a 2-to-1 in a lot of scenarios, because we know over time, my students have looked at their numbers to know that over time, if they are at 15 cent win, 15 cent loss, and they get just a 60% proficiency, that's about $50,000 in a year if we scale up and do it the right way. So that is the live trade that was called out. That was the people within our group were able to take because they seen it coming. It was very simple, and that's exactly how we trade on a day-to-day basis. So in this video, what I want to make sure that you understand is that trades like this are there every single day. And in my channel, I made sure this morning to share out exactly what my thoughts were. You can see in the screen share that I actually doodled. I'm a simple guy. I just made a doodle on paint and showed this is the key level that we're looking at. This is kind of what we expect to happen. Be looking for the right things. And in this video, I'm going to show you what the right ingredients are for a good trade and a good setup like this. So let's hop into the charts and take a look. So to wrap up this video, you can see as a part of the Pivot Precision strategy, we are looking for really 4 main components, and there's no secrets here. You could possibly just do this on your own, and I hope you're successful with it. But it's really finding that key level, and we made sure that we know where our key levels are. Some key levels are not super easy to determine. What we start off with is some key levels that don't change. That way that we know exactly what we're looking for. And that's what that pre-market high, pre-market low, and those previous day open, previous day close, they don't move. So we knew in that instance that we had a strong key level, and then we want to pay attention to volume. There has to be volume in the market for us to have some momentum. Volume will precede price from time to time, actually all the time. So we want to see volume picking up before, and then we want to see the right price action following up. And that's those candlestick structures that we've seen. And then as always, we want to be disciplined traders. So we want to have a risk reward plan in place. A lot of my students, we start with specific stop loss and target entry points. That way that they can protect their money and be a disciplined trader that's going to be consistent over time. So if you like this video and you found value in it and you became a better trader today, I want you to hit that like and subscribe button so I can continue doing this and making you a better day trader.